Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go. Generally related to three topics: wealth building, finance, and or commodities. We'll probably talk a little bit about uranium. One guy got me cracking up. I thought it was ultra funny. I mean, I literally started laughing after one of these posts. I think it's the first one I'm going to share. But yeah, let's dive in. Let's see what's going on, and I'll share my opinions. If you want to follow me at finding_finance, and if you want to join our community, finding-value.com, that's where we kick it over on the Discord channel. We have a Discord channel there if you're a part of the membership. And we've got a question and answer session coming up on Saturday, 7 a.m., just as a reminder. It says uranium, and this, folks, is what makes a market. We don't make the rules. We can only try to catch the waves and ride them until they tumble. So Cycle Bottom says, our initial greater than 1 billion KAP uranium scale down is harvesting at 40x returns today. The second scale down range may be achieved at the ASX Open for 25x returns. And this guy says, if you're selling your uranium at this time, you have failed. I have failed you. Please unfollow. I just thought that was incredibly funny. You know, here's something that I'll say about the uranium market, just about markets in general. I don't sell at a prescribed, a value. I don't prescribe, I don't sell if uranium gets to $100. Everyone and their mom was saying, "Oh, I'm going to sell uranium when it gets to $100 a pound." That was back in 2020. Oh, if it gets to 100 a pound, I'm definitely selling out, is what they would say. And I'm like, not me. It depends on the ratio. It depends if the stocks are overvalued. And here we are, some people saying, well, if we get our initial amount of 1 billion or greater, we're going to sell out. Guys, I don't go by any of that. I go by the valuation, the relative valuation of equities versus the commodity. I go by our inventory levels increasing. The answer is a definitive no on that front for uranium. Are we at the peak of an expansion phase of real estate? Nope, not even close. Then why would I be selling? Oh, that's right, I'm not selling. I agree with NT principle. If you are selling uranium at this time, I have failed you. Please unfollow. I just, I think that is so funny. But there's a lot of people that are scaling out. They're taking some of their profits, and a lot of people say that the cliche is no one ever goes broke taking profits. But I'll say no one ever gets rich taking profits at 100% gain either. That's what I'll say there. I've been riding these markets since 2020 in the uranium space. Am I going to get rich off uranium? I don't know. Is it my goal to? No, my goal is to extract whatever value I can. I don't have a prescribed price. I don't have if this stock gets to $20 a share or if my portfolio hits this amount. I don't have any of that. My amounts are ratios. If the uranium equities become overpriced in relationship to the futures pricing itself, yeah, I'm going to get out. I don't care how much money I have at that point. I'm not here to hit a certain valuation from that perspective. If it becomes overvalued and I lose my tailwinds behind the investment, I'm out. I'm done. If it doesn't hit my required amount, it doesn't hit it. I'm out. Um, you know, I used to work out when I was younger, very heavily in terms of trying to get a really big deadlift. I got it to as high as I could. I didn't have a set goal. It wasn't like, if I don't hit 700-pound deadlift, I'm going to stay in there or something. No, I just went until my body said, you know what? It's good. That's exactly how I invest. I'm going to go as far as I can where the market conditions are providing a tailwind behind me and the valuations are good. I'm going to continue to ride it until those change. If they change and I start losing the tailwinds, I got to get out. It's the way it is. I'm not going to blow up a portfolio just because it doesn't hit a certain amount. Kazatomprom's 6% cut of global uranium production is equivalent to shutting down Canada's oil production in an already tight market, if you guys need an analogy. So Canada produces about 6% of the world's oil production. Kazatomprom basically missing those production increases is about 6%. It's a huge blow to the world's production of uranium. It says the world's largest uranium producer, Kazatomprom, just reported they will miss their 2024 production targets by 9 million pounds. This is 6% of the total global production volumes in tight markets. This sector should continue to be on fire. Here's another one. It says many have been talking about this might be a Cigar Lake moment in the uranium sector. For me, this is at least proof that the increase in production will be slower and harder than most analysts have expected. We will not see a supply response as one we saw in lithium. And that is what our tailwinds are, guys. The tailwinds are we adding to inventory? If the answer is no, and we're drawing from inventory at a very low level, the game is still on, guys. The game should be played. The spin should be taken. The purchase of potential more shares or on the buyback should potentially be bought. It depends where you're looking and the valuations that you're getting for whatever asset it is. But the game should be played, in my opinion, as long as the fundamental market conditions have tailwinds behind us, which we do, in my opinion. We still have those. We've got Capital Cosm here. Holy crap. Spot price ask $110 a pound. And we continue higher. And I know a lot of people they get all, how can I say it, ginned up. They get ginned up. Guys, this is going to be a long-term, we're early. We still have a long way ahead of us. Yes, the valuations of the futures pricing isn't as good against gold, let's say, that ratio as it was a few years ago. I agree. It's some of the valuations coming out of it, but we're gaining momentum. It looks good. It says this kind of flew under the radar. Japan adds uranium to critical minerals list. And I know a lot of people, what they do is they look at all of the news that's released. And there could be positive news, negative news as we go along this bull market. What I look at is the underlying fundamental, just are we adding to inventory levels? If the answer is no and we're drawing from inventory, yeah, we're definitely in a bull market. And the price will start to move when the inventory levels become very scarce. That's going to occur across the board of any commodity that you're looking at. The news doesn't really matter. Yeah, people are going to start adding this stuff to critical minerals. If there's something negative that comes out, as long as it's not an earth-shattering moment, it could provide, a short-term pullback in whatever commodity it is. But does it really change the fundamental inventory outlook? Are we adding or subtracting? If the answer is that we are not adding, we're still in a massive bull market. That's all I'll say, in whatever commodity it is. This is the public. The ugly truth about U.S. oil production and why you should pay attention. U.S. oil production growth is far lower than what headline figures are showing. Plus 1 million barrels per day versus 371,000 barrels per day. The growth is slowing. It's not as big as what people think over in the oil space. This guy writes, this is not a normal market. The manipulation should be investigated. And this is oil. And it just dropped off a cliff in like seconds. I think there might have been some news that was released. Maybe, maybe not. A lot of news does get released to try to push prices down or higher, I think. And some people front run this. So just an interesting thing there. Kazatomprom going to be selling about 6 to 7 million pounds less in 2024 than 2023. That is nuts. particularly given uranium spot price rose about 100% in 2023. That is crazy that they are going to produce the production volume 21 to 22,500, 2023, 20,500 to 21. We're basically not getting any volume production out of Kazatomprom. Pretty much sideways. This is great here. So whenever I mention China's increased use of coal, a horde of Sinophiles tell me that they're really having a renewables revolution and will soon lead the world to net zero. I've circled the renewables revolution in the data of how they actually get their energy. So here is the energy consumption by China, and there's renewables right there, this little area right there. It is increasing, but I hate to say it, coal and oil and gas are by far the majority of what they are burning and what they're using to convert into energy. I doubt that renewables are going to make that big of a difference, guys. We're going to be using fossil fuels until we basically run out of them, is my guess. Renewables will supplement. I think they'll obviously add to the energy mix, but I don't think that they're going to replace anything. We just don't have enough materials to do that. Like straight out, we can't do it, even if we wanted to. Oh, let's go back. So coming on back, we got quakes. Kazatomprom had previously announced a 2024 ramp up in Kazakhstan's uranium production by 11.2 million pounds from that amount, which would have been minus 10% below the subsoil use limit, but have revised downward to just about 2 million pounds increase from 2023. So here's what their production looks like. This is what I think they're missing out on, the reduction versus the subsoil use agreements. And I don't know if they're going to be able to produce that amount. It looks like they're starting to hit limits to growth and a potential peak production. Maybe that's occurring. So here's the commodities bull market will be the greatest opportunity in your lifetime to get out of the rat race. So here we have further evidence of a second inflationary wave coming. Oil companies breaking out and back testing versus general equities. Always know the big picture. So this is XLE versus SPY, a 15-year chart. We've got a declining falling wedge, 15-year bullish falling wedge. We had a false breakout. We've broken on up, and we're doing a retest at the top here. We got a long way to go higher, guys, in terms of the ratio. Long, long, long way higher. Grady, another one, talking about silver here. Very big picture. Silver's looking fantastic. And once that upper yellow line is cleared, it will be on its way. It is holding the moving average 50 plus white support line plus the pink arc with a bullish reversal where we want to see one. Generational opportunity in silver. Now, I'm loaded in silver. I've got it, the physical stuff. I've got platinum. I'm loaded to the gills with this stuff, guys. I am a true believer. I walk my talk. Whatever you hear on this, I am probably personally invested to it with whatever I've got. So a lot of this stuff's in my portfolio, uranium, silver, the oil companies. I'm all in it, guys. I'm walking my talk. I don't just take money and go buy crap with it. I actually invest, and I think this is a generational opportunity. This is the time to learn and get really down into the weeds to figure out how you can profit from what's coming ahead of us. Risk reward. Fabi says, I'm starting to wonder whether KAP is sandbagging its own production because it pays better to see prices increase than it is to increase production. Surely I'm not the only one thinking this. Well, yeah, but they can do that. If you're the only game in town, you can do whatever you want. And it's not a bad thing. If they don't want to produce as much, well, then let the prices go up and let other people produce. It's the way it is. They don't have to do anything. Rystad, it says, we have revised our short-term oil demand forecast for 2024 and 2025 up by 0.6 million barrels per day and 1 million barrels per day, respectively, compared to our December outlook. So they continue to raise oil demand, at least Rystad, higher for demand. I thought we were going into a recession. Then why are we continuing to move the goalposts and demand higher and higher over time? Interesting. The reemergence of issues in the banking industry is the most significant development unfolding right now. This almost perfectly follows the script we saw in 2008. In the usual sequence of events, one issue triggers another, leading to a cascading effect that evolves into a more significant problem, necessitating government intervention to address the issues. Despite the fact that in 2023, four failing financial institutions collectively held more assets than the entire banking crisis during the global financial crisis, it's important to highlight that back then, over 150 institutions failed. This chain reaction appears to be in the early stages, especially if the Bank Term Funding Program is indeed set to conclude on March 11th. Fundamentally, these challenges highlight the Federal Reserve's role as the lender of last resort, underscoring the increasing importance for investors to own hard assets in this environment. So here's bank failures by year. Look at that amount, guys, in total assets. Huge, and it completely dwarfs 2008. Now, could this bank failures by year chart that I'm showing you right here, does that have any correlation to this silver price that's about to break to the upside? And what about all these other charts? Oil about to explode to the upside. I think that they are all interconnected. Everything that we're looking at is all interconnected. The people that know the bank failures are going to come are positioning in silver, are positioning in oil, are positioning in gold and all these other financial assets. That is what we're looking at. We're looking at the financial positioning of all of the players in the world based off of this information that is coming. Are we going to do some gigantic bailout and print a bunch of money? Yeah, probably. And that's what's going to benefit from that. What's going to be the end result? Higher interest rates, high inflation, and a large move in precious metals and commodities. That's the way I'm viewing it. And this could be one of the things that gets the ball rolling. Brady says, if you think my price target for gold of USD $15,000 an ounce in today's monetary value is over the top, then contemplate that it would take about $40,000 an ounce to back 40% of the US M2 money supply, which would be a reasonable percentage if so. Then think of where silver would be at USD $40,000 an ounce gold. And this is his minimum price targets. Gold at 10 to 15,000, silver at 370, oil at 250 to 300 in today's value. I also have targets for platinum, palladium, uranium. This commodities bull is the opportunity of a lifetime. Again, they are all interconnected. The bank failures and the money that needs to be created is connected to all of the charts that we are looking at. The people are positioning for something like that to occur. And that's where I'm sitting. I'm waiting and sitting in those assets, waiting for something like this to occur, for the inflation, for the interest payments to be, the interest expenses to not be covered and them to create money, all of that. It's all bundled up. Gergen says, if energy wants to outperform tech, then this is the time. This is the time, and this is the tech bubble, and we're probably going to head lower where technology is going to underperform energy. It's coming. Uranium cuts 2024 production guidance by 14.2%, 9.3 million pounds, says Scott, our boy Scott. Peter Schiff says, in reality, the job of the Fed is to create inflation, then deny it exists, lie about its cause, blame others for the problem, and pretend to fight it. The Fed creates inflation to both enable the federal government to run large budget deficits and to prop up the financial markets. There's the motives, guys. The motives behind the inflation. Prop up markets and to run large budget deficits. That's why we're seeing the positioning in the big boys in all these different assets in commodities and precious metals. It says even at the lower end of KEP's scale, this equates to a miss of minus about 18% on previous production estimates of 2024. In the perspective of 135 million pounds of global annual supply, this removes another 7.3% uranium from the global market. Absolutely crazy what's going on in the uranium sector right here. Here's another one. Who'd have thunk it? U.S. crude supply adjustments turning negative could indicate an overestimate of U.S. crude production. So U.S. supply adjustments of crude oil, look at the adjustments here, guys, negative. They're adjusting production lower. We might have a problem over in oil, and we're eating through inventory levels. And that's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel, guys. Subscribe to the website if you'd like. And everything's looking pretty good in commodities. Now it's just being patient. It's being patient. I've been in it since 2020. I've been accumulating along the way, and I'm just going to be patient and wait for this stuff to come. All right, guys, that's what I've got for today. We'll catch you next time. This is Finding Value.